Hello traders. Welcome to our comprehensive guide on fundamental analysis in the Forex market. If you're looking to make informed trading decisions and understand the driving forces behind currency prices, then you're in the right place. Fundamental analysis involves examining political, economic, and fiscal events that can affect currency prices. This can include reports on unemployment, economic policies, inflation rates, and more. As a Forex trader, it's crucial to have a basic understanding of the forces that can influence the currency markets. One of the main assumptions of fundamental analysis is that it evaluates long-term trends, much like a moving cruise ship that takes time to change direction. Additionally, currency trading is a relationship between two countries' currencies, so a news event or economic data point that affects one currency may not have the same effect on another. Keeping up with fundamental news announcements is essential, as they can significantly impact the market. With news at our fingertips and updates in real time, it's crucial to be aware of what type of events may occur, when they may happen, and how to prepare for them ahead of time. Combining fundamental analysis with technical analysis can help traders determine when and why large price movements may occur, and at what price they should enter and exit trades. Online brokers usually provide access to major scheduled fundamental news announcements. Governments and academic institutions provide various indicators to help evaluate a country's health, such as interest rates, employment rates, GDP, and trade balance. These indicators are typically released on a weekly, monthly, or quarterly basis and are followed by everyone in any financial or investment market. There are two main types of economic indicators: lagging indicators and leading indicators. Lagging indicators are released after the economy has already begun to follow a particular trend, while leading indicators' changes precede changes in the economy, making them useful for forecasting changes in the economy. Interest rates are the most crucial data point to remember, as they have a significant impact on capital in and outflows into a country's currency. A high interest rate attracts foreign investment, which increases demand for the currency, while a lower interest rate helps in devaluing a country's currency. The employment situation and unemployment rate are essential indicators of the labor market's strength. Non-farm payrolls measure the change in the number of employed people in non-farming businesses, while GDP is the broadest measure of economic activity and a key indicator of the economy's health. Finally, trade balance measures the difference in worth between exported and imported goods and is the largest component of a country's balance of payments. That concludes our guide to fundamental analysis in the Forex market. Remember to combine your newfound knowledge of fundamental analysis with technical analysis to make informed trading decisions. Follow us for more informative content. And join our Telegram channel today for free trading signals. See you in the next video.